Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Dan Houston, Chairman, President, and CEO of Nasdaq-listed Principal Financial Group. We're here for National Financial Planning Month to discuss financial inclusion and Principal's broader growth strategy. Dan, it is great to have you with us. Welcome to Trade Talks.
Jill, thanks for having me.
And the investment unit of Principal Financial Group is doing business now as Principal Asset Management. How does that align with the broader growth strategy?
Yeah, as you know, for us, asset management is a core part of our strategy. It's a global business. All total, we manage about $723 billion around the world, and it is the cornerstone to our being able to build great products for our customers.
Tell us more about the Principal Asset Management business itself.
Yeah, so it's made up of 1,000 different professionals in 23 different countries, covering 80 different geographies around the world. It's across all the asset classes in equities, fixed income, alternatives, real estate, and in large part for us, it's serving the needs of long-term investors, and that's core to us because the second big part of our business is the global retirement business.
And we're going to get to that, but on September 21st, you launched the inaugural Global Financial Inclusion Index, and that's really what caught my eye when I was going through my notes here. What does that measure, and what can you tell me about the research that went into it?
It's really exciting. So we did research across 42 different countries to identify what were the key components of ensuring financial inclusion. And after the work was done, and it was exhaustive work, we found out that there were really three buckets. One was the government bucket. The second one is around financial services, broadly defined, readily available consumer products. And the third was around employers. And when we did all the analysis, it turned out from top to bottom, number one was Singapore, and the United States was number two. Rounding up that top 10 were kind of the Nordic countries.
Mm-hmm. And what is it exactly measuring if people feel they have access to finance?
All the above. So the first one is, what is government doing to support the average person out there? So in the U.S., you'd call it Social Security. Secondly, around financial services, accessible credit to individuals like you and I, to small employers, available credit, if you will. The third one was around employer-based solutions, where they might get life insurance, dental coverage, medical coverage, or retirement. What was interesting coming out of the survey results itself, in those top 10 countries, they were equally proportioned over each one of those three segments, as opposed to be too heavily leaning on just employer or just government.
That is interesting. Now, when you look at it through the lens of the asset management perspective, how are you incorporating financial inclusion with what you're doing at Principal?
Well, a lot of it, as you know, comes from planning and education. Financial literacy is weak around the world. People just don't understand some of the nomenclature that we use, some of the conversations. And so one of the takeaways is, what can we do to reposition financial literacy so people understand what is debt, what is checking, what is savings, how do I engage, but most importantly, Jill, how do I plan to do a better job of reaching my financial goals in retirement?
And perfect time to talk about it because it is National Financial Planning Month, which is every October. And I've learned that you've spoken to Senate special committees on aging and promoting retirement planning and so forth. So what should we be doing now to achieve our retirement goals, our budgeting, particularly in this current market environment? That's the million-dollar question, right?
Yeah, so I think the first one is, you got to have a long-term plan. And a lot of people, as you very well know, spend more time planning their next vacation. They do financial planning. Financial planning materials and online calculators readily available. But the quickest and fastest way for those people that are in the workplace, save 15% of your income over the course of a working career, and you're going to replace 85% of your pre-retirement income. Most people can anchor against that. The second is to be very aware that the markets are choppy. As you very well know, every 10 years we go through some sort of cycle. Most people saving in an employer-sponsored plans, their tendency is not to move their money around. And as a matter of fact, it's better off today than it once was, because we have a lot of auto-enroll, auto-escalate, and a lot of people in target date, target risk funds, so they're well diversified. And then lastly, trying to reduce debt as much as humanly possible, and certainly not coming to retirement age with a lot of debt.
Dan, I have to pick your brain since we have you here. We're coming into third quarter earnings season. We have midterm elections coming up, into the more seasonally positive end of the year as well. What's your view? What's Principal's view on the current economy?
Jump ball. If you think about it, Jill, there's just a lot of dynamics going on around the world. I actually think third quarter earnings are going to come in relatively strong. In another couple of quarters, we're going to find out that they're going to have difficult comparables back to 2021, which I think will be interesting. Secondly, there is real inflation out there. We see it. As you may know, we have 150,000 relationships with small to medium-sized employers. And so we have our eyes and ears on what's happening with small business. Their wage costs are going up. Their input materials are going up. And they have limited capacity to increase cost to their consumers. And so I think we are going to be in a really difficult and challenging market over the course of maybe it's the next couple of years.
Yeah, but to your point, long-term investing is really what the goal is.
Absolutely. And again, as it relates to National Savings Month and understanding the importance around retirement, this is where you dollar cost average in. And for people who are not nearing retirement, who still have a lot of runway, and I mean greater than say 5 years, I think one of the worst mistakes you can make is changing the asset allocation. They're going to sort of move through this cycle. Most people find out they're going to be rewarded for not having changed their asset allocation if they were properly allocated in the first place.
All right, Dan, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.